So you've raised some early money from friends, family, and fans. And now you're trying to understand, why does it take so long to raise money for the next round? Well, in this video, we're going to be breaking down the 5 levels of relationships as it correlates with an investor, and what does that mean for your capital raise. So let's break this down to help you really understand, because once you go past that friends, family, and fans round, things get a little different. And if you understand these 5 levels, you'll understand what to expect for the time it's going to take for a capital raise. And at the end, I'm going to give you some guidance on how you can also speed up that process. So the first level, right, the first level 1 type of relationship is someone that's a new contact, someone that hasn't met you in person. It's the first time they've come across your business, and said this is all new for them. So the way you've got to think about it, for them, it's their first date with you, and it's their first understanding of your business. So now just think about this. If you were going on a first date, you would not be expecting to get into a marriage post that first date. But the crazy thing is, when it comes to capital raising, founders typically think that that is what happens, and it's just not. The way you've got to think about it is there's a courting process on both sides, and you want to understand more about them, they want to understand more about you, etc. So that's the first level. The first level 1 relationship is a new contact of someone who doesn't know you. It's their first time being introduced to your business, and they haven't been referred to you. That's an interesting second point. Next one is so level 2 relationship is someone who's been referred by someone who knows you, but it comes without an endorsement because they haven't actually worked with you or you haven't made money together. Now, to me, I position this is that they're aware of you or being referred to you. Now, this is important to know because there's some key points in this, is that they've been referred to you, but there's been no testimonial attached to it, or they're just simply aware of your business. To me, that's a level 2 relationship. Now, level 3 is someone who has worked with you previously, engaged, or observed your business and is a supporter. Okay, so the way I'd position this is a level 3 relationship is a long-term engagement of some kind, or a long-term observer of your business. This is a level 3 relationship as it correlates to raising capital. And in fact, we'll put up a chart shortly. You can see, for me, the higher the level of the relationship, the faster the actual transaction can take place. Now, to move from level 3 to level 4, a level 4 relationship as it correlates to investors and also for capital raising is someone who's referred by someone who has known you, that has done business with you, that has made money, and that provides a personal testimonial to you. Okay, so this is someone external that's recommended an investor to your business. They've recommended you, they've made money with you beforehand, and I would classify this as it's a money-making referral, and it comes with a testimonial. This is significant because what it does is it strongly enhances the clout of that introduction from that person, because they're also putting their reputation on the line, when it comes with a testimonial and a recommendation as well. That is a level 4 relationship. Now, going on to a level 5 relationship, this is the ideal scenario, and this is why you're able to raise money faster from friends, family, and fans, right? Because they typically sit in this level 4 and level 5 relationship, right? As opposed to when you go to level 1, level 2, level 3. Now, level 5 relationship, as I said, it's effectively a 5 to 10 year plus relationship, and you have made money together. So this is someone that directly knows you, has directly worked with you, and you've made money together, or they've made money based on your recommendation. This is a level 5 relationship. Now, I didn't do this work myself. I was actually educated on this by a venture investor in Singapore when we were very fortunate enough to sit down one day, and he said, okay, let me tell you my 5 levels of relationships, because then he gave me context about the people that he was introducing me to. And to me, that was actually transformational, understanding that little bit of information about how he categorized as far as the levels of relationships. And then when I thought about it more, I thought, we actually naturally do this without even really thinking about it. Okay, so let's go through a summary again. Level 1 relationship is someone that hasn't met you and they're a new contact. Level 2 relationship is someone that's aware of you or done business with you in some port, or just a long-term supporter. A level 3 relationship, they've had a long-term engagement or been an observer of your business for some time, right? A level 4 relationship is basically it's a money-making referral and it comes with a testimonial. So it's someone that's referred to you and they've actually recommended you with a testimonial as well. And then level 5 relationship is someone that's known you, made money with you for 5, 10 plus years, and you've done transactions before together. Okay, so that's to give you an understanding of those levels of relationships. So if you're trying to understand why is it that it takes so much longer when I step out of my network, that's why. So what we always say to people is that there's typically three steps to a buying decision. First stage is awareness, second stage is consideration, the third stage is actually the decision. Now, this consideration part is really important because of course, as a founder, you think, how can I speed that up? How can I make that happen? If it's, if they're sort of level 1, level 2, level 3 relationships, how can I speed that up? Well, there is a little hack. Now, these are the 6 and 7 key elements that we look for in a company that basically help communicate to an investor about your potential in a very few seconds. These are the elements that you look for, that investors look for, to understand whether they should be interested or not when they're trying to make a decision within a few seconds. So these factors are board and management. What is their execution capacity? What is their background? That's a powerful one for investors that are new to your business. Secondly, who else has already invested into your business? Who has done due diligence on your company and already invested into your business? This is another signal. It's a trust and confidence signal for a potential investor. The next one is if the sector you're in typically also creates a level of hype and a level of interest as well if it's really hot at that time and if there's basically a lot of announcements relating to transactions. The fourth one relates to traction. Now, this is often a big one for investors where if you're a B2B business, if you've got blue chip clients, that's a significant signal for a potential investor because someone else has gone through the procurement process and they've decided to buy your product. So it demonstrates product market fit at a B2B level. And likewise for B2C, the traction metrics that you've been able to achieve is also another way to increase it. And as Jason Calcana said, the higher the growth, the faster the capital raise. The slower the growth, the slower the capital raise. Really, really simply. And so for me, these are all key elements. Now, if you're a more technical business, then industry awards and also even government grants can be helpful to communicate to potential investors. So, in summary, that is the 5 levels of investor to business to founder relationship that you should be looking for and understanding that there's a correlation between how much longer it takes to get a capital raising done when you're dealing with those 5 different levels of relationship. I hope that video was helpful.